Everybody, it's Omar. It is Friday, March 30th, 9 a.m. Sorry I couldn't make the post a video last night. I'm just gonna make this video fairly quick and enjoy my weekend. So this is what I gotta watch for Monday. I'll post it on Twitter. If you follow me on Twitter, my handle is watchotrade. There we go. Oops, sorry. There we go. Yeah, so here's my Twitter handle for those of you who never followed me before. I posted a really good video. I think it's good. Talking about my top strategy yesterday. I'm sorry, 2 days ago, about my number 1 pattern for shorting. I recommend you watch it because it gives you a good understanding of support and resistance, and shorting into resistance. And it's interesting because the stocks, I review a lot of stocks on that, but I talked about tops was like really a good example of why I used the strategy and how you can short it to resistance to make money, and it did exactly what I expected it to do. And so did Guess. I said Guess was also gonna continue to give back gains. And I posted a screenshot because I didn't get a chance to trade it, unfortunately. I was really busy, but I was tracking it when I got a chance, and I saw that right into this right here, which is so support became resistance and it couldn't break it. We'll talk about that. The market is really choppy right now. Nothing too sexy out there. But we're gonna review some plays. So first one up is ACRE. ACRE had this run, then it had this pullback. Let's I'm gonna pull up this big chart here. Let me pull up 1 year just so. Actually, I'm gonna do 20-day. What is it? 20-day 1 hour. I just want to show you guys something. So this is a 20-day 1 hour chart. If you notice, close to 20 days ago, back in March 8th. This hit a low 55 cents, then it gapped up to 69, then it consolidates. When you get this consolidation, a lot of times you're gonna get a push. So you get the second push, hit a high of 82, consolidated, then had the last push to 98, and then it retraced, right? It retraced all the way back down to 69 cents, and now it's kind of found its support here at that 78-cent level, and it's on its way up. So what that tells me is that the potential there Monday is that it will retest this 98. If it gets enough volume, it may break it. But if it could get back to one of these levels and can't break it, guess what? You can short off one of these key resistance levels, But if it breaks 98 and holds, you could take it long. Remember, what you always want to do is you always want to see what the next overhead resistance is. Now, the thing that tells me that this thing may break $1 and keep going, maybe, is because this is the daily. This is 1 year chart. It's above the 50. It's above the 200. And this is the 300. You see how it touched the 300 and then got rejected? Well, it may attempt that Monday, and if it breaks and holds above it, that could be a potential sign that this thing could start running again. And then once it breaks that dollar mark, you do got some overhead resistance here at that 108 level. So you got to be careful because 108 is a strong resistance point. And it'll probably get rejected there, then retrace back, and then hopefully maybe it'll keep running. And then after 108, this 116 level is another area of resistance. So just be careful. When you take these plays, you want to, especially on the long side, you want to get in, see how it holds. If it holds 90, you could stay in. Otherwise, get out, take your profit and run. That's what day trading is. You just want a piece of that profit. You don't want to, you don't want to hold and hope. But ACRE, I don't know anything about the fundamentals. Maybe it's a good company. I don't know. My guess it's a shitty company because they all pretty much just about every penny stock there is a shitty company. But we'll see. So what I did was I just mapped my key support and resistance levels. So 78 is this key support level here, right? You can see that it's 78. And actually, you should put an alert there too, because hey, if it tanks, maybe you can dip buy it off 78. Maybe it just completely tanks. You never know. Nobody really knows what a stop is gonna do, right? The 78 or short rejection. These sub-dollar stocks, they're hard to get shares to short. A lot of times interactive brokers will have them available. but usually people gobble them up before the market opens if they're like short bias and they think there's going to be a big pullback. Centerpoint is probably the best for shorting these shitty companies, but what none of these gurus tell you is that most of these stocks are like hard to borrow. So you gotta, a lot of times you gotta reserve the shares before the market opens for them to be available, and you know you gotta pay a premium for that, for those shares. And you know, if you're not comfortable trading, you're like, shit, you mean I'm gonna take, you know, it's gonna cost me, I'm just using an arbitrator $100 to buy these shares to borrow these shares to short, and you know that $100 is lost. Like if you don't use them, if you don't short that day, you lose it. So you know, it's something that they don't really talk about. So you got to be real comfortable with your strategy before you purchase hard to borrow shares for stocks. Next up is AKG. AKG, I think, was up. It had this massive spike from 76 to like about $1, and it moved based on some news. I guess there was like some sort of like agreement between two companies. One company bought a stake in another company. There's like some private venture. You can read all about it. You know me, I don't give a shit about. I don't read any of the news. Probably should, but I don't. I just focus on the technical charts. And what I like about the chart, you know, it's up 39%. You know, so at some point it's gonna have a retracement. 102 is the high right now. You know, it retraced post market to 96, and it's holding like that $99 level. So if it breaks the dollar and holds, you can take it long, risking off $1. You know, if it doesn't, you know, potential dip buy here at 95 cents. The pre-market high is always a very strong support level or resistance level. If it breaks below it, you got to pay attention to that level. That's why you always mark that. All right, so you know, potential dip by 95. If it can't hold it, short it. Then a potential dip by 92. If it can hold it, you know, buy the dip, otherwise short it. And then 84 cents. Now again, you always want to look at a bigger time frame and see, you know, so I'll go 180 days, 4 hours. He's with me, babe. So you know, you do have some overhead resistance here at this 104 level and 114 level. So you know, you want to be careful. If the stock breaks above $1, you know, it can completely get rejected and just completely crash. So you got to make sure you map those overhead resistance areas. But those are also great areas to short into if the stock is too overextended. What you want to do is look at it over the last year, and this is the yearly. Yeah, I could just pull up that big chart. I'm using this one here because it's just probably easy for you guys to follow. So if you look over the last year, this stock was at $2.83 and came down to 42 cents. You know, and it tested the 105 before back in January of this year, and then rejected it. It tested 99 and then rejected it. So you know, it may get rejected again. So it may be a great short to potentially use my first day after first red day strategy to short in. Excuse me, short the breakdown. So you know, just keep that in mind. There's a lot of overhead resistance, and you know, history repeats itself. So it may get rejected and just tank, but we'll see. All right. Next up, oops, let me pull this out. Next up is Fuse. So you know, this is a company that, you know, I was telling everybody I was going to pull back. There's a lot of pumpers on Twitter when I posted that, you know, this was dog shit and it was eventually going to have this crazy pullback, which it did, just like I said it would. Go look at my timeline. You know, try to pump up the stock and, oh, you're wrong. They're just pumpers that are probably bag holders who, you know, whatever, just stock pumpers who are trying to pump the stock, you know, so that you buy and they sell while you buy and make a huge profit. So, you know, it's had this run, right? It's up to $2.10, and then it retraced all the way back to 128, 120 level, and now it had its first green day, right? And a lot of this is short sellers covering and dip buyers buying. But let's look at the 5-day chart. If we look at the 5-day chart, you know, it found some support here, you know, in this 119 area. Let me do 5-day 1 minute. Yeah, so it found some good support here. Now I'm trying to figure out what the hell, why did I do this? Let's do 5-day 15 minute. Oh, these were probably alerts that I had below. That's why 116 is the low. Yeah, what happens is I set these a long time ago. Like this was like before the run up. So they, you know, the stock just continued to gap. You see, it never got back down to that 116 level. That's why the alert is still there. I had set that alert from like, you know, 5 days ago or something like that. Yeah, it's one of the things with Thinkorswim. It's this weird thing. I'll just put a trend line there again, so that, all right, marks it out. That's what it is. All right, so you see it had this run up from 116 to 210, and it's gapped down and kind of consolidated here at this I want to say 120 level, 120, 121 level, and it's consolidating. So what you want to see is it on Monday, is it going to break above 152? Now, if it breaks above 152 and holds, it could potentially run to 164. You know, and get rejected. You know, it could potentially fill the gap back up here at this 178 level. So you got some overhead resistance at 177 and 188, and then 210. It could move. A lot of times these pump and dumps, what they do is they'll have the big pullback, and then they pump the stock up again, and then, you know, it starts running again. So look for those key levels to, you know, to buy above. If it holds. Now, you know, also keep in mind that maybe it's shitty and it's gonna just crash, so you just got to be careful. But I think that this may make another attempt to run. You know, less volume, so, you know, it's weak, it's showing some weakness, but we'll see what happens Monday. So that's why it's a potential for me. You know, I would just be potentially looking at it. If it breaks above this 152 and holds, you could take it for long. You know, testing 164, and if it breaks and holds 164, I think it could test 177. That's why it's on the watch list. All right, next, GERN. GERN, you know, this was the stock that, you know, I was talking about 2 days ago, the first red day, you know, day after red day here, where I was talking about here about shorting it at 550. And Steven Ducks actually, remember when I talked about the video, I talked about Steven Ducks, and I talked about, he actually posted his entry, and I said, let's go to his Profitly. I think he's crazy. Like, he takes a, I mean, and you know, like I said, all this shit could be potentially, yeah, he made like 100 grand or some shit like that. Now, potentially, you know, this could be all bullshit, but I think he's telling the truth with his entries. But he took a 100,000 share position. That's why he made $127,000. Now, you know, that's a lot of size. And what if the stock goes against you? I'm pretty sure that he has these. The losses are just as big as his gains. He probably doesn't post them. You know, when you take this risk, yeah, big risk, but big reward too, right? So yeah, he got in at 533, and I had talked about GERN, and I had said, and I was telling everybody, if you think I'm lying to you, let's go to my page. I'll show you that I wasn't bullshitting you. Like, this is the first time you're watching this. You're like, yeah, you're lying. You're full of shit. No, I'm not. If you go for those of you that are new, for those of you who've been following me, you guys know I do this shit every day. I'm basically a free chat room. But I told you guys the day that he bought it, same day I saw it, and I posted this I think before the market even opened that day. Yeah, this is where I first started. This was where I posted this. Now, this was before the market opened. All right. We bought this. Talk about this the same day, and I was talking about this, you know, and I had my levels mapped, and you know, I was telling everybody 550 right in this level here, because it had broke below it before the market opened. But I told everybody about this 550 level to look to short it, and you know, and I talked about it. So GRN, just like I said, you can short an overhead resistance. 550 level has a lot of resistance. Stock showed weakness, go against you, can cover, and then looking to reshort at a key resistance level. Because what happened was, when the market opened, it tanked, and then it re-gapped up. So I posted this through Yahoo, and I told people to reshort. You know, because what I did was I shorted, covered, and then reshorted when it gapped up, and I just went in really big size. So and then what I did was I covered at the close, which was like at $5. So you know, I was telling everybody this, and I was telling everybody that's probably what he did. He took a huge position, and he saw the same thing I saw, and he does that too a lot. We do pretty much the same thing. He does pretty much the same thing I do, where he'll wait for the first rate day to happen. He'll short. He'll wait for the day after, map his support resistance levels, and then take a big short into that resistance. And because usually it's showing weakness, the stock is gapped up so much that it's going to fade. That's what he does, and that's what I do too. And that's how he makes a lot of money. Your odds are in your favor when you take shorting, when you take shorts in that, from that mindset, you know. So, you know, today, yesterday, it you know, it had this gap up, but it got rejected at this 464 level, and then continued to tank down to like 415. So I'm looking at one level. If it breaks and holds 476 Monday, if for whatever reason it squeezes and holds it, you know, because it got clearly rejected by it, you could take a long risking off it. And then I would say, you know, be careful at that $5 level, or this high right here, which is what, 490. So, you know, just, you know, you want to be careful at that 490. You may get rejected. So, you know, but I'm sorry, no, this is yeah, 494. So, you know, just be careful at this level. Yeah, 494. Yeah, I'm right. 494. So, but if it holds 494, this thing could, you know, you have some resistance here at 5. So, you know, I think if this thing breaks above 476, my guess is that it's gonna test $5 again and then probably get rejected. You know, but if it breaks 5, this could run again. You know, I don't know what the fundamentals are, but there's a lot of people that are bullish on this company for some reason. I don't know what the fundamentals are. So that's what I'm looking at. It's 476. Now, in theory, if it didn't hold 420, you could take the short again. I mean, there's nothing stopping you. I didn't really map it, but right here where this low is, we could say, what's that low right here? What's that, 407? So you could put, in theory, you could say potential dip buy at 407 or short rejection or breakdown, really, because it would be a breakdown of that because it's above it currently. It's all semantics. Doesn't matter. You can say whatever you want. But in theory, yeah, if it didn't hold 407, I mean, you got some good support here at 397 too, so you got to be careful. But if it didn't hold that 407, 397 level, I mean, you know, you got some good support here at 382. The best trade to me to take short here, to be quite honest with you, is this breakdown of 382. If it broke 382, there's nothing stopping this from getting back down. So you know what? Let's put that. That's a much safer short. So we'll say potential dip buy at 382 or short rejection or breakdown. And that's the safest play. So, you know, this requires discipline. Now, what's great about this is that with Thinkorswim, you'll get the alert. So this may not happen for a week, 2 weeks, but you know what? When it does, when it touches this, I'll get the alert on my phone. So, you know, if I'm not in front of the screen, I also get the alert in the charting. That's why I love Thinkorswim charting. They just suck for everything else. All right, next up, AKS. So AKS, the reason why I have this on my watch list, this is the yearly. Let me show you something. Sometimes I'll look at a chart and I'll analyze things and I'll just see patterns. And if you look at the yearly chart, right, this stock gapped down. It was at high 770, right? It's gotten down all the way to $4. And when it got to $4, it had this run back up to, guess what? The 300 simple moving average got rejected here. That's the yellows, 300 simple moving average. So 678, then retraced all the way back down to 434. Had another run back up at 614. But look, it's up above that 430 level. So in my mind, I'm thinking, okay, you know what? As long as it holds above 434, or whatever the low with this was, which was the low was, this was 436 actually. You know, this may be a good potential dip buy to retest at $5. That's all I'm thinking about it. So, you know, it's slow moving, and you know, I may not even touch it. But if it breaks above this 462, let me put 10 days, 30 minutes. If it breaks above 462, and it's at 453 right now, well, I'll look to see if it rejects it. If it rejects it, you can re-short it down. But if it holds it, you know, there's some overhead resistance at like 469 and 472. But I think this thing will fill the gap and eventually test $5 because it tends to seem to do it. So you could take a swing trade if you wanted to on this, and risking off that 436 level. And you know, so obviously you want to minimize the amount of shares you buy because it depends on what your max loss tolerance. I'm sorry. So, you know, if you don't like to lose more than, say, $200 in a trade, then don't risk more than what it would cost you to lose $200 if it broke below 436 or whatever the number is, you know. But I think this will touch $5 again. So that's why I have it there. And I think it's found its it's formed a higher low on the second retracement, so I don't think it's gonna break back down, but we'll see. That's why I have it there. Next up, GALT. GALT is a stock that, you know, went from 384 to 495. This is a pharmaceutical company. I've seen this move before. You know, when it has a green day, a lot of times it'll have multiple green days, as you can see here on the daily. This is the 1, the 5, the 15, and the daily. This is kind of the charting that I look at when I'm really in a trade. I just, you know, I have this up here for you guys, just to make it easier for you. But I'm looking now. I'm trying to see I remember why I put this on here. Oh yeah, because it's about to test that $5 mark, and if it could break and hold $5, you know, I think you could get 25 cents of upside before the next rejection point, or, you know, next resistance point. And if it breaks above that, it could potentially run. And some of these, you know, therapeutic companies can move. As you can see, this is a company that, for example, like this day on March 8th, it went from 525 to 560, hit a low of 540, 524, closed at 558. So, you know, it moved. This day it went from 510 to 535, low of 508, closed at 525. This day went from 491 to 539. So, you know, this day went from 470 to 502. So, you know, it has a little bit of range, you know. So it's something that you could potentially make a trade off of. Like I said, I'm not in love with any of these, but these are just potential trades that you can take, you know. And then in theory, you could, if you wanted to, map support below to potentially buy a dip. I don't really care to, me personally. I'm just looking to see if it could break and hold $5. You could take it long. All right, so next up is ZN. ZN is up. A lot of chatter about this stock. You know, it found its low at 3, and it's sort of consolidating. There's a lot of overhead resistance, and for me, I would be looking to short into one of these overhead resistance levels, because when you look at the yearly, when you pull up, you know, let's put up 1 year. You know, every time it gets up to this $5 level, it always seems, you can't seem to hold it, and then eventually give it all back. So, you know, it's gotten to a high of 690, but look at on this day when it hit, it went from 449 to 690, then closed at 588. And the next day, it pretty much gave it all back, you know. So, you know, and here it got up to 521, then gave it all back. Well, it's approaching that $5 level, so I would be watching it closely to short it if you could find the shares to short, because I'm pretty sure a lot of short sellers are seeing what I'm seeing. But right now, if it breaks above 482, you in theory could take it long if it broke and hold, risking $5 or 498, because there's some clear resistance at 498, 514, and then 540, 544 level. So, you know, one of these areas is probably going to get rejected and just tank, because that's what it has a habit of doing. So, you know, that's what I would be looking for, you know. But you can risk off one of these levels to potentially go long. Just be careful, because you got a lot of overhead resistance above it. All right, next up, CPE. CPE, oh yeah, the reason why I put this on my watch list is because, you know, it's at a level where if we look at the yearly, let me go 1 year, CPE. All right, let's do 1 year. So look at this. Every time it gets to about this, you know, 1330 level, it retraces. So it's pretty much at the, it touched 1330 and it couldn't break it. So if it breaks 1330 and holds, this thing will run and test this 1370, 1390 level. But I think it retraces and it always gets back. I made a lot of money shorting this stock because it always has a lot of range when it pulls back. But you know, it's gapping up, and a lot of these petroleum companies are running in tandem. So, you know, if it breaks above 1330 and holds, take it long. But, you know, remember, you got that overhead resistance. So, so remember that, you know, the 1370, 1390, you know, you could, you know, it's potentially, again, once it breaks there, you got some overhead resistance here, 1370, 1390. So map your overhead resistance for potentially, that should be like your price targets. And then you can reverse and go short if it can't hold, and watch how it will tank, because it will tank. All right, so that's what I'm looking at in regards to that stock. Next up, JAG. JAG, why did I put this on my watch list? Well, you know, like I said, I like for stocks holding their highs. You know why I put this one? It was holding its highs. It's not, you know, 1.5 million shares traded on the average. It was 3.5 million shares traded today. You know, it's choppy. It went from 12 to 14, so it's up a lot. And I love these gap to fill belows. Like you see when you have gaps usually fill at some point. So you got to expect this to come back down. And so right now it hit a high of 1417. And what I'm looking to see, is it gonna break and hold that? If it breaks and hold it, take it long, risking off 1417. Here, let me pull up like a 10-day, 30-minute. Yeah, you see, if we go up, pull up the yearly, let's pull up 1 year. You know, it does have this gap to fill actually above at 1430. So, you know, what I would be looking to see, is it going to touch 1430? How does it respond to 1430? If it responds by holding, then this thing could potentially run to $15 to come Monday. Otherwise, it could reject this and then just completely tank. You know, and then if you look, you know, when it's had big green days, it's had multiple green days. Look at this. It's had a run here, big run here of just green days, big runs of green days. You know, it's had it several times. So, you know, this is the second big day. You know, it could continue to move. So I think it's gonna break 1413 and run. I think it's gonna test 1430, and if it holds 1430, then I think this thing will potentially test 1470 and then touch $15. All right, so that's why I have it on my watch list. All right, next up, CBI. CBI, I'm just looking at one key level. Now, this is the reason why I put this on my watch list. So, you know, I was a little more analytical with the charts for the watch list because there was nothing that I loved. So I'm just trying to find things that I think make sense. So CBI, this is why it's on my watch list. You notice right now it had a green day, and it's at this. It finished at 14. It closed at 1440, right? Look what happened the last time it retraced down to this 1370 level, 1370 level. It gapped up to $17. Then it gaps down to this 1440 level. Then it had another run to $17, right? Then now it's gapped down back, right, to that support level of that 1370 of this candle here, which is that 1376, and now it's up again. So in my mind, I'm like, well, history repeats itself. Even though this is a head and shoulders pattern, maybe maybe it's found its support and now it's going to run again. So that's my guess. So this stock could have the potential to run over the next couple of days, just simply on that. So, but I won't look to buy this unless it broke and held 1452. All right, because that's the high. That was the high for yesterday. And that's it. You know, if it holds it, ride it up. You know, obviously, if you want, you can use your price target. Your first price target would be 1494, and then, you know, 1512. You know, so you can figure out where you want to sell. But you can hold this for a couple of days. I mean, it's showing a consistent pattern. You know, so we'll see. All right, next up, HRG. I put this because this thing had this massive gap up. Look at this. Look how overextended it is. Look at the gap to fill below. Had this huge day, and then what happens every time it has a big day, it usually gives it back. Big day has a run. You know, this day had a big day, had another green day, and then gave it all back. This day kind of consolidated, ran on a little higher, but then completely tanked. This day had another, followed by another green day, then tanked. So I'm thinking that maybe, you know, it's either gonna tank or it's gonna have another green day, and then Tuesday it's gonna have the big tank. So, you know, just keep an eye out on it, because, you know, it has a gap to fill below. So you got to think that it's going to fill this gap below. So right now I'm looking to see if it breaks above 1662 and holds, take it long, risking off 1662. If it can't, just short, risking off that key resistance level. There's potential dip buys at 1621, 1602, 1598, because there's some good support here. Otherwise, if it can't hold these levels, you could short risk it off these levels. And then you got 1582 and then 1518. And if it can't hold 1518, this lights out and this thing gets back to 1430, which I think it will get to eventually. And you see, these are stocks that I trade that not a lot of people pay attention to. And I'm really just basing my trades off key support and resistance levels. That's all I'm doing, guys. That's what trading is, you know, to be quite honest with you. Now, I told you guys in that video that I made about the first red day, you know, the second, you know, the first day after that red day, you know, it was already day 2. So yesterday was day 3, and I told you guys that guess is so overextended that it's just gonna eventually just completely just tank. You know, it's so far above the 50-day simple moving range and has this gap to fill below that if you look at the yearly, guess always has a run, and then this is the yearly, right? It'll have a run, then pulls back, has a run, then pulls back, has a run, then pulls back. has a gap up, pulls back, gap up, pull back, gap up, big pullback, gap up, big pullback, right? Gap up, big pullback, back up, pullback, back. So what do you think? It's gonna pull back down. It's gonna find its way down to like this, you know, at least to $19, you know. So you know, again, just staying, you know, in with the mindset of that, you know, I think that, you know, and I told you guys that it was going to continue to pull back to short into a key resistance level. Look, it couldn't hold 21.24. You see? Couldn't hold 21.24. Let me zoom out, right? Just to show you, right? This was the first red day, right? Right here. When it had maxed out 22.50, closed below the price it opened. So on this first red day, this is the day that I like. Look, this is the key support levels that now become resistance. And when the market opened, look, it couldn't hold that 21.24 level, which was a key support level, which now became resistance, and you could have just took it short. And look, it can't seem to hold 21.16, 21.24 level. And look, it tried to test it, and it couldn't hold it. And if you notice, it just been consolidating sideways, can't seem to hold that level. And if you see, right, keeps testing it, but never can hold it. See, boom, 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 that 21.24 level, it just can't hold it, and then roof. Just like I told you, and I told you that if you watched the video that yesterday, it was gonna continue to pull back more, and sure enough, it did. And I tell you guys, when it can't hold key support levels, if you have shares, you know, if you have the leverage in your brokerage, keep adding to your position to short, and because it's not gonna break it, and then boom, this would have been your reward. And I bet you there's people who are going to hold this over for 2-3 days, because guess what's going to happen on Monday? It's going to bounce up. It's going to get rejected into another key level. Could be, now it could be 2090, could be the key resistance level, you know, support level that now becomes a resistance level, and then continues to tank. And watch Monday, I bet you that it tanks some more. All right. And you're going to get eventually a huge day where it's going to just tank back down to like 19. Could be Monday. That's why it's on my watch list. All right. Because it's so overextended, and you got to think that even though it's had a couple of red days, maybe it may go on Monday, but I think, you know, it's gonna have a day eventually where it's just gonna completely just tank. Next up, Twitter and Facebook, to me, I would think would be the plays that I would be looking out for the most on Monday. You know, this stock went from 32 to 27. There's a guy named Centron Research on Twitter. And he was like bearish on Twitter because he was talking about the privacy concerns and all that crap. So when he posted that, a lot of people listen. They don't always listen to him, but a lot of people do, and a lot of people got bearish about Twitter, and that's what caused it to tank. You know, and it kind of just tanked with Facebook. So I'm bullish on Twitter. I still think Twitter is going to hit $50 at some point, unless the market completely turns and goes bearish and the SPY just completely tanks. I think that as long as the market stays up, you know, Twitter will continue to move up with it. So Monday, I'm looking to buy breaks above levels, but looking at these price targets to potentially then reverse my position and go short. Because what's going to happen is Monday, if the SPY is green and the Dow is up, that if it breaks above 29.33 and holds, this thing could rip to 29.77. And eventually it'll pull back. But if at some point it'll hit one of these levels and then gonna get completely rejected and then just completely tank back down, you know. So, you know, Twitter would be, I think, a great stock to go long and then short on Monday. It'll be volatile. It's easy to get executed. You know, the spread is always like 1 cent. You know, sometimes 2 cents. So it's easy to trade, to get in and get out. So that's what I'm looking for Monday. And let me do 5 day 1 minute. Yeah, if I do 5 day 1 minute, okay, here we go. Yeah, so Monday, you know, I'm looking to potentially go long if it breaks above 29. If it breaks above 29.33, I'm looking to take it long. And you know, if it breaks and holds 29.33, I think this potentially can hit 29.77. So you know, it's just something to think about for Monday. You know, so let's see what happens come Monday. You know, but definitely look to short into one of these resistance points. You know, these are all, I mapped them out. That's what I'm doing, guys. And the other stock that I'm pretty well, let's talk about two stocks. Let's talk about this stock I put on my watch list. This is interesting, Energizer, and this is where you can leverage my strategy that I talked about the first day after red day. All right, for those of you, and you know, so you're comfortable with this, just paper trade this. You know, you don't need to use real money. All right. Now, what I mean by first red day is that the candle, the daily candle, let's pull up the daily chart, finished red, right? So we're gonna pull up 1 year chart, and you know, it had this crazy gap up, so it always, you know, it's gotta fill the candle, but the candle's red. That's what I mean. All right, now notice every time Energizer has a run, it's not like the bunny, like the Energizer bunny. It doesn't have a lot of energy. Stupid joke, I know. But you know, it always tanks, right? So it has a run, then it has a big tank. Then last time it had this crazy gap up, what did it do the next couple of days? Tanked. Gap up, tanked. Gap up, tanked. So guess what's gonna happen Monday? It's probably gonna tank. Now, what you're gonna wanna do is, and it's probably gonna fill the gap below. It's gonna be a monster short. All you need is 100 shares of this, guys. You don't need a lot of shares to make a shitload of money shorting this. Now, this is what I did, right? So I mapped out my key support and resistance levels. Okay, so here's the support and resistance levels for Monday. My guess is, right, people shorted this and held this. Monday, it's gonna spike. It's gonna spike into one of these levels or close to it, and you're gonna short, risking off this, and this shit is gonna fucking collapse. Or it may start collapsing pre-market. We'll see. But you could, in theory, go long, risking off one of these key levels. All right, looking for potentially exit, because remember, the stock doesn't hold its gains, so it's gonna tank at some point. All right, so you know, what I'm waiting for is that break of 58.87, because once it breaks below that, this shit is lights out. That's the safest place to go short, you know, and you're gonna be able to short this stock. All right, it's a high price stock. It shouldn't be difficult to find shares to short. It should be easy to borrow. All right. So that's what I'm looking at. That would be interesting. So, you know, map out your key support and resistance levels. Look for a key resistance level to take a short into. I mean, you could buy the break. Like, let's say if it holds above 60.31, you could take it long, risking 60.31. But just be careful, because, you know, at some point it's going to find its resistance and it's going to tank hard like it did here. You see, it hit 64, and then this thing tanked all the way back down to $58. So, you know, I mean, the range is crazy. So look for Monday to short this Energizer. All right, maybe it runs, but I doubt it. All right, and last but not least, Facebook. So Facebook, you know, I hate Facebook. You know, I've made a shitload of money shorting this. You know, and it's been very volatile. Now, you know, it found that low of like 148. My price target was 147 to short it. And you know, it got to about 148, I think it was. So I missed my price target by like $1. Let's see, yeah, 149. I'm sorry, but I was thinking 147. But you know, it's been slowly grinding up. Now you got a lot of overhead resistance, so you're gonna be able to take a great short on this Monday at one of these key resistance levels. But you can also go long on it, man. You know, it all depends though. This runs with the SPY, with the Dow, so you just want to be mindful. Now, you know, you've gotten this run up, and it's consolidated, gaps up, and it's consolidating. So it looks like it wants to continue higher, but that doesn't mean that it can hit one of these levels. So again, it can test this 162.85 and just completely tank again, you know, because it's been getting around that area, and every time it gets to that area, it just completely washes. And all you need is 100 shares of this, guys, because you get like 4 or 5 points every time this trades. But if it breaks or holds 160.13, take it long, risking off that 160.13. Just remember that I think, you know, you do have some resistance here, 160.71. But if it can get above 167, 161.05, it can test 161.42. And I think it will if it gets and holds the 160.13. I don't know if it's gonna break that 161.42. But if it can break and hold 161.42, I think that this thing could, you know, potentially fill the gap back up to that 167 level at some point. But we'll see. We'll see. So these are areas that I would potentially, you know, go long or short. So like if it can't hold it, you can short it, risking off 160 or 159.62, 158.08, and 157.17. These are the areas that I'm looking to potentially go buy dips or short, risking off of, because, you know, all I'm doing is looking at the overall chart and mapping my key support and resistance levels. You see, that's all I see. I'm looking at support resistance to potentially take trades off of. That's all, folks. So that's what I'm looking at, you know. But if you want to continue to test my strategy, look at what Energizer does Monday, because Monday, you know, it had a crazy gap up. It kind of gave most of its gains back, but it's so overextended that I still think it's going to give it back. and see if gas, see if I'm right. See if gas, continues to just tank more. Risking off a key resistance level above. All right, folks. So have a great weekend. I'm gonna go enjoy mine. For those of you that are religious, happy Easter, and I'll talk to you soon. All right, like, subscribe.